have 5 seconds?
All right, anyone take it after.
Good timing. All right. Well, I'll use this moment to make an introduction. Welcome back, guys. I know it's been a while since we've done this this stream. Yeah, I mean, there's been a lot of stuff that's been going on. Good stuff, like a lot of like work-related stuff that we're trying to figure out. Things like that. So if you have any questions, I can see it. The live chat's open, so you're good. You can ask whatever you need to. Let me pop it out. That way I'm not focused here. Okay, so yeah, I mean, so as far as everything's concerned, what's going on now is like there's a lot of shit going on in the market. The coronavirus, all that stuff is kind of really affecting everything. And so what we're going to do right now today is we're going to kind of discuss how we are going to see. Well, we went through some economic information, and now we're going to see that how this is going to affect the market and stuff like that. So that's what we're kind of looking for. We'll discuss that in the beginning of this video. At least we're going to talk about how we're going to talk about like different functions of like economics, the world economics that we're dealing with right now. And then after that, we're probably going to discuss how we kind of see the rest of it going from here, since, you know, we're at a very pivotal point and we want to see where it goes from there. So yeah, I think that's what we're going to start looking into. Yeah, so that's kind of where we are. So we'll begin this discussion as soon as he gets back. All right.
I'm back.
All right.
Okay, so there are a few things that Josh touched on, but you know he focused on currency, right?
We focused on exchange rates. So
exchange
just
rates?
currency exchange. So not currency per se, but exchanges. Like how different economies will interact with each other is kind of important. No, it's not kind of important. It's exactly everything, right? So when you pull...
Because he did mention that if there is an uneven or even amount of imports and exports between countries, it affects the price or currency.
It completely affects the price, yeah.
So then the question here... I'm sorry.
No,
So the question here is that came up to my mind is like, why isn't the yuan stronger? Because we get a lot of imports from China, and that's definitely an imbalance, right?
So the yuan should be stronger right now, right?
But they are a currency manipulator, in which they can inject their own... I mean, we are too. We just did it. But they do it more often than we do. Meaning they can control their currency, make it weaker to ours, so that they can bypass tariffs or any of that.
I agree. Okay, so let me think. Let me see. So they're a lot more corrupt than we are from a face value type thing. I mean, there is a lot of corruption regardless. And that's, I think, one of the bigger things that this whole virus has shown us. Especially, like, to me, I've been thinking about it a lot, and that it's... Let me at least open this up so they can see that. All right, there you go. So basically one of the things that you kind of, like, this whole thing peeped the window into was how actually corrupt everything is. Like, when you saw everything happening, when you saw the way the numbers were being reported, when you saw different things, you got to see how much each country was actually reporting, how much they were actually discussing and saying and stuff like that. So it was fascinating, especially to know the types of people who are getting tested, you know, how much it costs them, how much it costs anybody really, how much the insurance covers it, that kind of stuff is extremely important as far as all of this is concerned. Now, what that kind of means now is that because we see that, you get to see also which country has the most strength over its own economy. So the United States is a massive, massive economy. So is China. But China has a lot more direct control because they've designed themselves as a communist society. They function on free market and stuff like that, but they're still communist as far as social.
What does that entail?
That entails that the government more or less gets to decide the distribution. So however much is, you know, inside the... So like I said, economically they're not communist. They're very free market as far as economics goes. But socially, as far as like welfare and stuff like that, kind of, but it's more like they're more dictative on behaviors, like social behavior inside their own countries. So that's kind of what their focus is. And because they can do that, they have this invisible hand where they can kind of like fully hold on to whatever like economic thing that they have. So they get to decide their policy all on their own, right? They do have they have like boards and shit like that, but there is a say all. There is one person who can control essentially everything however he wants to. So it's borderline a dictatorship. And because of that, they have control over how they behave in the world economy. So, for example, you see this. So, for one of the things that's interesting is that the price level between the Chinese and the United States in general, what? So at the beginning of this, back in October, so we kind of like the Chinese yuan became a lot weaker versus the dollar, right?
Mm-hmm.
And this is still how they're combating the tariffs, but they're getting, and you can see these fluctuations. They're getting their strength back because a lot of U.S. domestic product producers are dropping, right? Because they're cordoning off everything. Because China has like a 3-month advance on this than we do, right? So they're 3 months ahead of us. They quarantined the situation significantly faster. I mean, and that's how you know they lied, is that they were reporting maybe like 10,000 cases, but they were quarantining off like 100 million people, and like each one in like 40,000 or 400,000 like level populations. They were quarantining those entire areas. Like the entire area of Wuhan was quarantined almost immediately. Like this is how you know that the reports were incorrect, because no one quarantines for 1,000 people. And so the real cases, I think they ended up reporting that the cases were 200,000, something like that.
So what does this mean?
This means that China has,
of economics,
as economics go, the worst is unreported. Right. So the biggest part of this is that we don't know.
Okay, so then we can, the next logical step would be, or maybe the conclusion can be like, even though the worst is not reported, the effects will still be there.
Yes.
So therefore, if there are less people, or if there are more deaths than reported, it'll show in their production and anything.
It'll show slower. So China's already come back. China's resuming production again. So that's what I mean when I mean China has a 3-month head start.
Actually,
on
yesterday they quarantined a new local.
They came back, didn't they?
Yeah,
the cases are starting to come back. Yeah. We're expecting to see a second wave in fall, apparently, after this one comes off, which makes a lot of sense. And there is a preventative measure that can be taken against it, and what that is to extend the quarantine into fall. If you can extend it into fall and remove the ability for people to leave, then the virus itself is going to have to die out. It doesn't have a choice, right? Because of how it operates. Now, let me think appropriately. So one of the things that, can you repeat your question?
Right. So my statement was that even though they may report false numbers.
Oh right, but slow. It's gonna happen slower.
Slower growth.
So when we see like, I'll open up the wrong one. When we look at this, so this drop was huge, right? And this happened as the fears of the virus started to like kind of get stronger. If the real reports were to come out, we'd see a lot more of a vertical drop. Right? Mm-hmm. And the reason we'd see a stronger vertical drop is because the market would intake that information, because what I'm saying is still based on some form of speculation. Right? It's still speculative. And so because of that, we don't necessarily believe that how do I say this? And because it's speculative, the market isn't going to react necessarily on speculation. Sure, we'll get these like hi-fi drops and stuff like that.
Oh no, it will be on speculation.
But
because if they were to release real data, then it would just do it on real data.
It would do it on real data, and it would drop and hold it.
Yeah, exactly.
But instead, what it does is, like, for example, this day,
people are speculating that it could go up,
and that's what this stuff is. People are speculating when on the downside, for example, we see a lot of huge wicks on the downside, right? And like you don't see that. You got one of these, and maybe you got 2 of these for this entire down run, but then the downward wicks are 1, 2, 3, 4, 5, 6. And that's just from this angle. So what the idea is, this for me as of this moment represents some form of speculation, in which a large majority of the population is speculating that the situation is significantly worse than what we think it is. And as a result of that, you start seeing these high speculative moves where these are just random jumps, right? When a company is considering doing a buyout, or when they're considering getting FDA approved, or the FDA approved might come, these are all speculative, but the stock will react regardless. But it won't hold that value, right? There was like space, right? Space is a phenomenal example of something like this. Space had a very high speculative growth. Oh yeah. Space had a very high speculative run, and that's what happened, right? And now it just dropped off.
Mm-hmm.
So, and this was expected. Like everyone knew this was going to happen exactly this way. But this high speculative run happened because they speculated that they were going to do better. They were going to outperform on this run that they had going, and they didn't, obviously. But we still saw the move. But then it returns back to equilibrium. So now, as far as this goes, if we release the real numbers, the reason we didn't dump it is because a dumping market creates higher dumping. Because first of all, there are a lot of people who are margined up to their eyeballs, and that's a problem. When people have that much exposure, they have the ability to get margin called and stuff like that. When they do that, they have to sell their positions, thus creating a reverse short squeeze, which doesn't necessarily happen to the same extent. But for huge drops like this, it can. And for this drop, I think it happened. I think that when the reason they're trying to catch the falling knife, so to speak. And so as we're dropping, and we're dropping really fucking fast, not now as of this moment, but like we were dropping very fast. And the reason it didn't fall faster, but it should have, was because of how much covering up there was being done, right? And so all of this cover-up has that effect on global economic policy, how people are interpreting it, because the goal, because at the end of the day, all of this is to control not the small minority, but the weak majority. Because the weak majority are the deciders of it all, right? If people just stop buying a specific product, if people stop investing in Teslas, if everyone collectively just stops buying a Tesla is bankrupt. Doesn't matter how powerful the people who run the company are. The same thing applies for political economy. As far as like countries, if human beings stop, if the majority stops behaving, if the majority stops following their rules, then they start losing. And so that's what happened. So when they were trying to cover it up, they were trying to prevent a mass fear in which more people sell. Because this drop could have been significantly bigger. It could have come down to even like 3 years ago type levels. The 170s. I still think it's possible because we hit 218.
Mm-hmm.
I still think it's possible that we could hit those, right? If this doesn't recover, and now it's just dependent on the mass psychology, because the market isn't just made up of traders, but it's made up of people who are in long-term positions, people who are in long-term companies. So that's kind of where this all stands.
Okay, so this is all from slower growth, right? Slower growth is a result of people not following their original behavior or regular behavior of buying, naturally.
Yeah,
and this is why companies are going bankrupt, smaller ones.
That's why there are corporate bailouts being done. That's why the $2 trillion was injected into doing bailouts. Because, a lot of people complain like, hey, why are we bailing out these big businesses? Which is true. Like, we shouldn't be bailing out these big businesses because what that means then is they're not prepared, right? A lot of their money is not going into the right place then, because they're not preparing themselves for any type of down run. And the whole idea is too big to fail. That's not true. They're not too big to fail. They're just too big to not be bailed out. So that's the idea here. And so the reason so even small companies are getting bailed out as well, because if we lose these big companies, we lose infrastructure. And corporate infrastructure is a very important thing. And that if we don't have it, then, that's also, like, not a good thing as far as, like everything is concerned. Because we need small companies to exist. Mm-hmm. Because small businesses are important for the ability... Because every company starts off as a small business. Some of them make it to large businesses. So, yeah, I don't know if that makes any sense, but the bailouts happened, and they were kind of a good thing, but they were poorly executed. They're giving these companies money. They're giving them money to operate, which is bad.
Yeah.
Because they're not prepared then. Boeing makes a shit ton of money, a shit ton of profit revenue. So that profit revenue has to be eaten. And of course, no one wants to lose their bottom line.
So these bailouts, I think actually you can Google search it. I saw a distribution of their the $1 trillion injection, but I can't find it.
Oh, look. Yeah, and I know what you're talking about. Hold on.
Because is most of the it's proportional to the company, but is most of the bailout going to the smaller companies or the bigger companies?
The smallest amount is going obviously to the
smaller
companies. Yeah.
So it's proportional.
But it is proportional to the amount that's necessary. Let me see. Trillion. It's probably under. I think I know where you were looking. Or I think I know where you saw it, but I'm trying to remember. Yeah, it was a good distribution. I don't know where it is.
Yeah, it's fine. I think it makes sense that because
It's
the
proportional.
airlines got $50 billion, and that's because they're huge.
Yeah, they're massive.
Right. So
And their down run is terrible. But small businesses like restaurants and stuff like that, they're in trouble.
okay.
They're losing a lot of business. So,
All right. We want to make sure this conversation is productive. So what did we learn from this?
so first of all, trading economics is a resource which I use more.
Right.
So globalization is actually very slow, and that's kind of important. That's why the trade deal took over a year and still hasn't happened.
Anything political is slower than we think. We just need to see when it gets enacted.
Exactly, and when it gets thought of, because there is still a delay as far as what people think. Because as soon as people start talking about the idea,
the rumor.
Yeah, the rumor is enough to get started, because the rumor leads up to a new position. So if the rumor that there's going to be a price fixing between China and the U.S. here at, let's say, 7, right? Mm-hmm. That's when you see a huge spike. For example, this is an example. This isn't true. You start seeing it, and then let's say right here they decided to not do that. Then you see this dump. Yeah. But for us to do that, you got to lead up to here first, and so you can take advantage of those specific events, those rumors. So you play those. You don't play those big though, because they're speculative. So they're important economically speaking because they increase the quality of life around the world, not just in the United States, but in any country that trades. Essentially, trading, and this is factually proven. Immigrants and trading always improves the global economy, and also helps the domestic economy of any country. Period.
What would you say? Immigrants of
Immigration and trade always, so imports and exports of human beings, not in a slave type way, but in the other way, always results in a higher quality of life for the people who live there and for people around the world, just in general. Trading specifically. This makes sense too, because if it's harder for us to make chairs, like nice chairs, but we make really good wheels, well, we trade it with another country that makes really good chairs. And then all of a sudden, everyone else has good chairs for a really low cost. So now you don't have to sit in a plastic chair anymore. You can sit in a nice, well-made chair. That's the idea. And that itself, getting a better chair, is a higher quality of life.
Yeah.
The quality of life that we lead is is basically tantamount to what the quality of a life of a king or a prince lived back in like the 1600s. Why? Because we have machines that can clean our clothes.
Yeah.
We have food, countless amounts of it. We have the ability to eat whenever we desire. We have the ability to be entertained on a whim. This is all, like, this is a higher quality of life than even kings would lead back in the 1400s. Mm-hmm. So that is the point, and that happens through agreement between other countries, because you can advance. Every country has to advance simultaneously. Now, but there is another problem here. But because when you have to enact an agreement, there's a winner and loser, which is very true, and that also means that people are fighting for policy because policy decides the bottom line. So as I was saying, like the car manufacturers have to pay more to put in safety regulations, so they will do whatever they can to make sure they don't have to put in any more. So our quality of life goes up because we have a higher and safer ride. Their quality of life goes down because they lose more money in the process. So, but at some level, the policy has to regard human life to the highest standard. That's what it is. And so, but it does affect the bottom line directly. So when you see something, for example, if from now on, like if there was a rule enacted that the government said, all right, now any of these big businesses that were given bailouts have to save up money and pay back the United States government at some point. They will do. And they did that. You will see a massive decline in the number of people who will invest in the stock, right? Or you'll see that the people who profit off these companies won't make as much, and because of that, that would affect directly their production, everything. Essentially, they might produce more because they don't want to pay as much. So, but that type of information is important because the policy in the long run will find its new equilibrium. We just don't know what that equilibrium is. Yes. And then, what else? And the current price is affected by every purchase, and that's very accurate because of the fact that when there's a trade going on, like essentially, the value of a stock, the value of anything, is dependent on every transaction of its past. But none of the transactions of the future are currently priced into how a stock is valued. Right. Speculation also counts in this price exchange. So if people are thinking that Tesla's gonna boom, then everyone starts getting into Tesla. For every dollar that's put into Tesla, that is already based on historical data, the data of the past. People have decided between this point to this point that there's a speculation that Tesla could hit 900, so everyone purchased it, brought the price up to 400. Or I don't know what Tesla's worth right now. Okay, so brought it up to 800. So that's the idea as far as so prices are, everything that's priced is already priced in, but anything futuristic, anything from the future is not priced in. So, and I think that's a fair assessment. Now sometimes the value, so there are a lot of people who think the stock market's going to go down, so they're shorting their positions. Now, let's say maybe there's a lot less people who think the market's going to go up, but they still buy it. Their price is still affected it's still bled into the price. It's still there. It's welded in there, but there's just more people who think it's going to go down, therefore it's short side. So we see that more. So every single opinion that is executed on is already here. Now, every opinion to come, that's for the future. But that also gets us more information. With more information comes a better decision. Right? But also comes a delay. For example, like the timing of the S&P drop, right? When did we get into the shorts? We got in really early, right? But we didn't get in big, and maybe we got out a little too early for a bounce, for example. I think it was this bounce, right? So that is an important feature as well of this, which is that like the way these drops kind of come about, the way that we take them, like, yeah, you can speculate, but if you're still speculating and we're here, you already missed this. So you can't speculate, so you have to give yourself a certain amount of exposure. So that's how you execute on it to some extent, at least.
Right.
All right. Cool. And then there's obviously, we know about the inflationary, recessionary periods as far as exchanges go. That means we have to start. But now, so if we look at it right now, right? So if we look at the Chinese yuan, what does this mean exactly? Apart from the fact that the Chinese have a stranglehold over the value of the dollar. At least they have for the last, week, 2 weeks? Yeah, for like approximately 2 weeks, they get to control how much their thing is worth against the United States dollar. Right? It's not increasing, because theoretically, we should start seeing it drop. The yuan should be gaining strength because everyone should be buying from them. But they fixed it, if that's the case.
Yeah.
And if they did fix it, then that's why we're still seeing it at $7.
Right.
Now, if we do see a massive tank in the Chinese yuan, what does that mean for the United States economy? While I think seeing the United States economy, I'll ask you, what do you think? Is it a good? What would happen to our stocks if the Chinese dollar tanked, or if the U.S. dollar tanked against the Chinese?
So historically, when the Chinese yuan weakened, we decreased in strength. Yeah, historically, yeah.
Other way, isn't it?
Nope.
When we hit
in 2018,
when we hit $7, we went when the Chinese yuan hit $7, we came down. Like anytime they price fixed, we were coming down. Like this whole shit was like a currency war. All this stuff.
2018, every time it went up, meaning it weakened, we I think we went down.
But that theoretically makes no sense, right? Because when the Chinese yuan weakened, or when the United States dollar
buys more, yeah.
Because when the U.S. dollar buys more, that means we technically have more power over that amount. However, that also means, all right, well, let's think about this. We're getting an influx of trade, which means we're spending more, which means the global GDP is changing by that amount. So hold on, let me go back to this. So when the United States dollar was going up, or when the Chinese price fixed us essentially, and we put us up to 7.15, we saw a major drop.
Yeah. Can you change to the 1 year chart?
Yeah, why is this the 4 hours?
Oh yeah, that's better.
Okay. So when we saw, we can actually go back. So from here, from July of 2019.
So when it first broke 7, that's when they were.
Which is here, which is right here.
Yeah, currency.
So our economy, I think, dropped at that time. So it was July. Right. Yeah, right here. July to August. This entire drop was Chinese currency manipulation. So the Chinese, the Chinese weakening their currency is bad for us. Right.
Though it should be good for us, right? Because we can buy more.
Technically, being able to buy more is a good thing to an extent, but it also throws us off the equilibrium. So So what matters here is that when the Chinese become stronger, it means they are selling to us. People are buying from them. Therefore, their currency is becoming weaker because more people have them, right? So this is where it gets really confusing, because if China has, okay, so let's think about it this way.
Don't touch your face too much.
Okay. So if the United States is buying more from China, if China is selling more stuff to us, we should be seeing that the Chinese yuan is becoming stronger. Right? Okay. Now that makes sense. Okay, so the seller should be receiving more strength in their dollar because more people are buying their products, which means they're getting more currency. Their currency is now more distributed and more owned, which means people are buying from them more. Like the desire. So in order to buy a Chinese product, you first need the Chinese yuan. So if more people buy the Chinese yuan, the yuan gets stronger. So if we let me fix the order, that might make a little bit more sense. CNY USD. USD. Okay, so here's the reverse effect. With the Chinese, so now this is where the Chinese dollar is getting weaker, right? Our dollar, or their dollar becomes weaker. But when they're stronger, what that means is, so this is the inverse of what we were saying earlier. What this means for us when they're doing better, what this means
when
for
they're
them,
doing
when they're doing better, more
getting,
people are buying their currencies, right? Because there's no other way for us to purchase their products.
Yeah.
We need the yuan in order to purchase their products.
Right.
And so that's kind of important. And as far as the economy goes, we should see that the Chinese dollar should be getting stronger against the US dollar. And when that happens, we should see our own progress here in the S&P 500, in our general stock market, right? So we can look at it. Let me see. So from 323 to, let's say, 330. So March 23rd to, what did I say? What was the other day? I'll just do this way. March 23rd to the 26th. Right. So here's the 23rd. And then the 26th is here. Alright, that's a little fucky, but actually I'm looking at it daily, so that makes a little bit more sense. But essentially, what we saw...
there will be divergences now.
Yeah, there will be, but it still actually followed. The US dollar, or the Chinese gained strength over us in that point. And we saw, and we're seeing, and we're seeing that because China is slowly, was at least at a point starting to return to, back to normal, back to their equilibrium.
Which means that,
which we should see more trade.
Which correlates to them being stronger.
Exactly, because more people are buying from them.
Right.
Especially, you should actually be seeing the Chinese dollar should be fucking exploding right now. And the reason it should be exploding is because China is the only country right now that is capable of going back to production.
Right.
And so if they go back to production, they're the only ones who can sell. Right. They decide the prices.
Right.
When they decide the prices, we have to purchase. We don't have a fucking choice, right? Toilet paper is apparently a commodity right now. And so as a result, China can decide how much they pay for it. So that's kind of important as far as like the world economy. Because China doing well is not bad for us. You know what I mean?
Yeah.
So that's what's like important here. China doing too well, that can be bad for us, because if they start getting a stranglehold on the rest of the world and they take certain things that we used to have that used to make us money, then we'll start seeing a drop. But that'll change with the economy. Like we'll see a rule, like we'll see an agreement, for example, like if we sell something specifically to Russia, for example, and China gets in talks with Russia about them being the sole supplier of it, what do you think is going to be what's going to happen to the United States market? Even the very rumor or the beginning of a discussion of exchanging who buys from what.
Yeah.
We'll tank. And we'll tank hard. If it's a commodity that's like that we make a lot of money on, we will lose a fuck ton. And why is that? That's because we're losing a moneymaker there.
Yeah.
China is monopolizing.
Essentially competition.
China is, and I think that's actually China's goal. China and Russia have a goal to monopolize the entire world. Mm-hmm. And you can kind of see it now. It's more obvious now than ever. If you could technically invest in a country, you can. There are instruments for it, but we don't have them. But if you could, then China and Russia are the way to go right now. Saudi Arabia is not playing ball. That's why the whole oil thing happened. But I think Russia has some level of influence as well as where everything has gone up until this point, right? So because in general we're not exactly allies with the United States or with Russia or with China.
Right. We're not.
So they have something to gain from doing that. So so I've kind of talked about this ad nauseum. We understand the point. Now where do we go from here?
Well, Josh said that you can't really play macro for like intraday. So it's more long term.
Yeah. Where do we see ourselves
6 months, 1 year.
Do you think short sides are better as of this moment?
Yeah.
Like, because actually one thing here, if you bought a put here, you would not like this day. While you gap down, you would not like this day. You try to sell. And then the next day happens. And you'd hate this day. And then this happens. And then this happens. But then you'd really hate this day. So at the end of the day, you either buy and sell over and over again, or you just hold long term. And I think now, since this account's kind of big, we should use some of the fucking margin to buy long term positions in certain stocks. Leverage some of them. You know, while like airlines, I think fucking some time ago was amazing because we called it. We called it on the day that Boeing, UAL, American Airlines, those were like perfect times to get 100% out of them.
Yeah.
We didn't, but it was a perfect time.
We did. We played BA.
Oh yeah, we did, but we didn't get stock.
Yeah.
So that was a good time to get stock because 100% of the stock is insane.
Well, now it's coming back down actually.
Yeah. So that's what I. Oh shit! I gotta tell my brother to get out of this.
UAL is at 24.
Back at 24.
Yeah, it hit 40 and now it's at 24.
So there you go. But did UAL get bought out yet, or the bailout yet?
I don't know. I don't know what their time frame is. I just know that they got approved in Congress like last week.
Okay, so they didn't get it yet. That's what. If it was last week, then they haven't gotten it yet. Because then you'd also see a huge spike on UAL from that. Yeah. This might have happened from the approval. I doubt it though. Sorry. Yeah, UAL still got a bit of fall left. Oh, that's a good time. Is Boeing still up?
No.
What are they at?
They're at 125.
Okay, so it's
122.
Yeah, they tanked again. Yeah, it was a good cat. This looks like a dead cat bounce.
Yeah.
Fuck.
So instead of doing macro, we need to actually do. We need to go to. Can you go on Okanaday? We have to map out every report that's coming out now. Because like today was a report, right?
Yeah, the job
then
report.
There was some form of reaction.
All right. Well, yeah, next we got to start listening to those.
Yeah.
Maybe. Okay, so we're here. Tomorrow, there's like... Yeah, here we go. Fuck. All right, I would take shorts now for this specific information.
They already actually released PMI a little bit before.
When?
We were thinking of that.
Today's PMI?
No, I heard...
The PMI isn't released until tomorrow.
Yeah. No, I heard Umar saying something about PMI. Being bad.
Oh, I think they think it's going to be bad, no?
Oh, they're talking about that one. Okay, so...
The manufacturing index. This is the services index.
So, I think manufacturing is more important.
It is more important, actually. And we got the ISM as well. So, let me see when those are released. That was released at 8:15 ET. Okay, so let's do 10 o'clock PMI. Let's see if the market reacted to it. That was Wednesday, right?
Yeah.
I just know that the fucking thing. Alright, SPY. Alright, Wednesday, here we go. So we should see around 10. So yeah, that's exactly right. Yep, there you go. Report was really bad. So they did not see growth there. But the services you should see is coming out really bad. The ISM. Yeah, okay, so buying puts now is not smart. Buying puts tomorrow up until it is a good idea, though. Because...
Wait, buying puts up until or after?
Right before they release this information. Okay. Because you're going to see a pretty big drop. And it's probably going to be priced in, actually. So maybe getting in one now wouldn't be a terrible idea.
Wait, so you checked the PMI manufacturing and how that reacted?
I haven't checked it yet.
Or no, you just...
I just checked. It was bad. Like I just know it was bad.
So did it react before the data came out?
No, it happened. It happened about 15 minutes afterwards. But let me check. Is this Wednesday?
Yeah.
Okay, cool. So 10 o'clock. So it happened. It began. Okay, so the first drop happened at 10 minutes after it was released.
Okay.
10 minutes after, like it happened about 20 minutes after the PMI was released. But then what came after was the ISM. So hold on, let me go back. So Wednesday we saw the ISM released at 10. The PMI. Oh shit. Okay. No. That's right. So the PMI happened at 9:45. There wasn't really any reaction for that one. So we want to look at 7:45. Here we go. right here, we saw this peak out, and then we kind of saw it drop. We saw like a little bit of a drop that happened a little slowly. Then it bounced back up after it took support. At 10, which is here, 10, we actually saw like kind of a jump. And that was when the, what do you call it, was released. The ISM was released.
Also, the construction spending and petroleum status report. So 10:30.
10:30. But 10:30. But the market didn't drop until 15 minutes after the reports were released. So around 20 minutes actually. Then we saw this drop.
Okay.
But that report wasn't released until 10:30. So we still had 10 minutes till. But there was a huge drop on it. And then as soon as it came out, which is right here, we did see a bounce, then we saw it drop again. Right. So what that means then is that the reports actually came out to be better than we expected, but not good. Huh, interesting. We're just below contracting. Just barely. We're just barely below contracting, which is kind of funny. That is not bad.
What is contracting? 48?
No, it's 50.
Okay.
Huh, that's fucking weird. Why? That doesn't make sense, actually. Wait. Oh, wait, no. Do you know why? This was for the previous quarter. This is not for this quarter.
Okay.
I don't sure. This is.
Well, this is the first quarter. It just ended. That's why they're reporting this now.
Let me think. So the first quarter ends from December to February to March. We're in March right now.
Yeah, we got into April. So that's why they released this.
December, January, February. Okay, so February didn't crash until February. Until March, beginning of March. March isn't incorporated here. The next report's gonna suck. That's my thinking. I'm thinking that this report right here does not incorporate the actual production slowdown. The production didn't slow down until what? March? Like mid-March?
Right.
Then the market crashed. The market crashed in the beginning, but like we didn't see that. So the data does not include that at all.
Yeah. We can assume that it's half. Like so the average of the January and February overwhelms the bad data in March.
I agree.
But then we'll see the actual, I guess, most of the effects in the next quarter.
Yes, we will. But the next quarter doesn't come out until later.
Yeah, until the end of it.
Yeah. So for now, we might actually just see some like ubiquitous movements, like price movements. And the reason for that is because it's because they don't know. They don't know how bad it is. And we're not going to know how bad it is. As far as everyone's concerned, this is how bad it is, but it's not. Right? Because PMI first quarter. I didn't know what dates it covers. I'm assuming it covers... I need to know what dates this covers. What the fuck is this? This is just a specific company. What the fuck is Philip Morris? Oh. PMI.com. Wait a second. Okay. Yeah, okay. I want the fiscal quarters. So the 2020 fiscal quarters go from, okay, so that makes sense. So January 1st to March 31st. So we do have a quarter, but the slowdown did not happen until March. So it makes sense that it starts in January, but now the drop begin. Oh, Jesus Christ. See, when did the March drop? The drop started in the beginning of February, which is fine, but it wasn't. It was just a fear thing. It held up. The actual closing of the production didn't start until like halfway through March, right? So let me look. I probably remember. 1, 2. Yeah, it didn't start until halfway through March, like towards the 13th and the 14th. So the quarterly slowdowns didn't happen. So they're not. So we're seeing a drop. We're not seeing the drop, and the reason we're not seeing the drop is because it's not as what we expected. It's not happening as we expected because the drop is included. Only like a small portion of this quarter is included. So if they have a projections list, when we see the projections, that's when we'll see the first big drop. But I don't think they release the projections in that sense.
Mm-hmm.
My point being, I think this is going to get worse. But I don't think it's going to get worse just yet. Does that make sense?
Well, in order for the second half of the data or the second half of March to actually come through the next quarter,
yeah,
not in order, but we still have to go through that slowing. Like we're going through it now.
Happen, yeah. So it's
but
gonna be a
no one's going
drop,
to.
Yeah.
Like it's not going to. What has to happen is that when the slowing happens, news has to come out that okay, they're stopping production.
Yeah.
In some.
And we'll see. Yeah. I mean, a lot of production is going uncovered, and that's one of the more important parts as well. So you need to physically look at the production numbers. We need you need presently updates with the production numbers. So because we're not going to get those reports often. But I also don't think that the PMIs are not quarterly. Yeah, I don't think they're quarterly.
No, they're They're like there's a weekly,
yeah.
There's a monthly, there's yeah.
This is the monthly quarterly.
Yeah, because like today was weekly jobless claims.
I see. Okay, so what that means then, because we don't get the PMI reports in quarterly, which is a good thing, we should be seeing a bigger drop in the next one.
Right.
So the next month. Because at one point, the United States government is going to require the shutdown.
April.
If this doesn't get better.
So wait, so this was.
So we're in April.
Oh wait, so that was for this month.
That was for
March,
yeah. So it wasn't as bad.
Interesting.
We expect it's dropped.
Wait, that
it's
means
lower.
their
It's 3 points lower. We're now contracting.
Yeah.
But we're not down. We're not as down. I was expecting like 33. We're 48. So that's the thing. But I'm not the only one who was expecting that. A lot of people were expecting that, and as a result, the market's not taking it badly. But for the next one, they could. And if they do, then that's going to be bad. I think what we're going to see, though, is the services. Because services make up a lot as well. Like, services, the United States is a service-based country. So, it is very possible that we're going to see, like, a huge fucking drop on the services index. Like, they've already come up with a guess, so we can look. So they're thinking between 38 to 43. The previous level was this. Okay, so they're expecting a similar type of drop. Yeah. So we're seeing it drop more. We're expecting it to drop even more than that. The services PMI, down more than 10 points, showed a significant reaction to the virus in the March flash, especially for orders expectations. For March's final unchanged, value of 39.1. So the services index, our previous one was 4.94. The composite level is here. Yeah. So they're expecting to see it to be similar to what we're getting now. Which, actually, if it is that case, then we're going to see a pretty big, I think, jump up from it. Intraday, not long term. Okay.
So what we should be looking out for is a weekly or monthly PMI reports of April.
Yeah.
Okay. What else?
I don't know if they have weekly reports.
Yeah, probably not weekly. It's monthly.
Yeah. ISM reports. We have one more.
Okay.
This, the petroleum reports are important. Let me take a look at the oil real quick. So crude and shale has been kind of pushing back up along with the market. So let me take a look at SPY. So with this bounce, we're seeing okay. So shale's reacting harder. They're playing ball, so to speak, but they're not apparently. So, yeah, I'll have to think about this one. But I mean, I think I'd have a general idea of what's gonna happen. So we're gonna start seeing some upward slides for just a bit, probably sideways, and then we're gonna start seeing us slip downwards again. But this time we're not gonna fall hard. So I think entering in short position, selling credit spreads.
No. If it's slow, why would you buy options? You just sell the calls.
Yeah, so opening up credit spreads.
Yeah.
Or actually, we technically have margin, so we can open up just selling them outright. But if we're wrong, holy shit, that'll be painful.
Yeah, so don't do that.
Well, we try it once, see what happens. But
No. See what happens. You do risk versus reward, even though you have a lot of money.
100%.
It's not our money.
Now I'm doing it for sure. Anyway, I think that's, all I can really come up with for this one. Can't really think of anything else right now. Also tired. So I'm going to call it